And we are live, live, live. Good morning to everybody on this gracious Tuesday morning. It is Financial and Treasury Tuesday, where we are going to be going through a lot of issues that pertain to your money and the things that you're looking for and you're trying to make your monetary decisions. I'm with my co-host, Vernon, who has frozen on me a little bit. Internet's a bit dodgy today, but who has frozen on me a little bit. But we'll catch up with him a little bit later. But today, people, we're going to be going through quite a few things. The regular market roundup. On that market roundup, we'll be touching on we'll also be touching when we go into our deep dive on NAPSA issues. We're also going to be talking about the latest news in the East Africa community, which is also going to help break into that. And just a few notes on our credit and our debt as a country and what we're looking for and what I'm talking about in terms of aggressive preparation. Just a quick thought in that area, and I'm going to give a deep dive into that area as well. Our topic of discussion today will actually be about. Our main topic of discussion today will actually be about financial determination, trying to make sure you determine your financial future, how you can actually work on that, and why that's of extreme importance to as many people as possible. So, buckle up, everyone, get in for the ride, and hope you're able to enjoy today's journey. As I said, I am your host, Munyumba Mutwale, and I am here for Behind the Markets. And if you're joining us on social media, please give us your name and where you are joining us from in the comment section. Remember, tag a friend. Today, we're going to be talking about the NAPSA issue and breaking down what that means to some of you all. And we have Vernon coming in and out once in a while, but there is hopefully the young man is saying that he usually does feel good and handsome. How are you doing there, Vernon? Right. I think we just got to try and soldier on then. So looking at today in terms of the financial markets and our market roundup, the first thing you're seeing is that the kwacha has dropped to 17.75. This is the lowest that it's been since mid-December 2022. Since mid-December 2022, exactly. Yeah. So we've actually managed to get a kwacha that has wiped away all the gains. So the conversation about whether this was temporary or whether it was just tax season is starting to look like we've settled into a groove. Now, either it's very aggressive dollar selling by the central bank, or we have actually seen people who are now starting to dump a lot of dollars regarding this. Now, there was some news. There was some news that was written by the Kwacha Treasurer regarding this, where you actually are seeing some members of the future some members of the market starting to dump dollars in expectation of the fact that the Ministry of Finance did actually send a debt deal to the did actually send a debt deal to those who are following. Um, sorry, to those, did actually send a debt deal to the creditors, and it's going off ahead. So you are seeing corporates starting to offload dollars. You know, they don't want to catch themselves in a situation where a lot of their costs start to increase. So those dollars maybe they were keeping in reserve. So it did actually read that in the weeks beginning April 16, the Kwacha extended 3.9%, and this was a streak. This ended the streak of 122 days of loss based on market fatigue. And what we're starting to see is that corporates are starting to offload dollars, or not worrying, but obviously in anticipation of what they might be able to see in the next week. In terms of the meetings of the next week. So keep an eye on what's happening on the market. Now, remember that our corporates and our interbank prices actually do affect what's actually happening on the market. So keep an eye on what's going on there. Now, we've also did see that our stock market hasn't moved yesterday. It's still up about 8%, 8.97% year to date. And we also did see that we are seeing that that our bond market moved up about 0.16%. So buying happening in the bond market, buying happening in the Kwacha, it does seem there is a risk on sentiment towards Zambia, basically being led by the charge of the FX rate itself and also improving the outlook of the currency itself. Now, going into the bond market, what we have seen today is that our bond market did actually buy up. Our bond market did actually buy up. There we go. Going into our bond market, we did see that our bond market did actually go into a buying position, and we did see the bonds. We have seen bonds trading positively, up about 0.16%. We also did see that in dollars they were up 0.38%. and also upwards. Other big news, by the way, that did hit, and I think we just missed it on our stock market feed, is that the rand is actually the kwacha is actually stronger than the rand for the first time since mid December as well. So kwacha strength has actually returned back, where the kwacha has actually superseded the rand in strength. So currently we are actually seeing a strong kwacha over strong rand, which means that we're going to start seeing probably cheaper imports coming in from South Africa versus the import prices that we're expecting to see in terms of the inflation data that we've been getting. So that's a big piece of news that we actually should be paying attention to. But going back into market data, we are seeing, as we said, that the bond market is on an upwards tick. Commodity markets, we're seeing that copper was up on a slightly amount, 0.02%, while we saw oil dip a little bit by 0.56%, and gold was up 0.1%, still above $2,000. But in Kwacha, we are seeing that a lot of the currencies are still taking, a lot of the reserve assets, or what we call wealth insurance assets, are still taking a beating. Cryptocurrency down to 500,000 in 2028 per Bitcoin. And we're also seeing that Ethereum down 2%, mainly because Ethereum is still holding. Bitcoin is still oscillating between 29,000 and 30,000, and gold is down 20. So when you look at it from year-to-date perspective, Bitcoin is up 73.96% on a year-to-date. But if you look at it on a monthly perspective, only up 2.78%, and on a weekly perspective, it's down 11%. While Ethereum is down 1.19%, but up 8.13% year-to-date. On the month, and up 69.27%. So you can actually see that Ethereum is holding strong than Bitcoin in Kwacha. Simultaneously, we're also seeing that gold is up 7.89%, but has lost 9.24% on the last week, mainly because of the rally of the Kwacha. So we actually have seen the strengthening of the Kwacha actually affect the position of gold portfolios for people. So this is why I keep telling you people that when the equation goes correct, if you overloaded on your wealth insurance assets, that's like sitting there holding an insurance portfolio and nothing goes wrong. In good times, your insurance portfolio is going to really go bad. In bad times, it's when it goes good. So you have it as a smaller increment just to expose yourself to it. So this is just an insurance policy on broad market downturns. But currently, we seem to be picking up on broad market strength. And that's why you're starting to see that the major parts of the market, be it the bond market holding 7.3% up and the stock market now at 8% up, are starting to pick up the pace. So the major part of your portfolio is now starting to pick up the pace and the strength that you'll actually be able to see. Now, here's some of the major stories that hit the wire yesterday. The Bank of Zambia governor did say maybe that's pushing it too much. And those were his comments on the debt deal coming in very quickly. And he said, look, maybe we will get some movement, especially the fact that we are starting to set an agreement. But awaiting an agreement might be pushing it a little bit too much. And that might be the exuberance by World Bank President David Malpass, who was busy saying that he's trying to get China to agree to the structuring of the restructuring coming in this week. Other piece of news is that Zambia did give its creditors Zambia last week gave its bondholders a concrete proposal for restructuring of its $3 billion in Eurobonds. And the Ministry of Finance did say in a planning session, did say last week, Friday. So one of the key points I think we all have to pay attention to is that if they have actually sent that out, this is probably what's triggering a lot of people, because if they're confident enough to start sending out an agreement to their bondholder, it probably means that on the horizons, we're probably seeing something being worked out by the bilateral partners. So that concrete proposal, now it's time to start debating it and speaking about it, and they are getting ready. In African news, Uganda's GDP growth has hit 6.8% for the first half of the year ending June 2023. So remember, they have their financial year end up to from June to June. So the first half of the year, they saw 6.8% from the previous year, mainly due to services, agriculture, and forestry. Now, Uganda is hoping to get to 7% GDP growth, mainly aimed at crude oil extraction. Uganda's plan is eventually to get to about 230,000 barrels. So this is why I keep saying East Africa is a hotspot we're not paying attention to. In copper news, we did see that Volkswagen has partnered with Vale, Ford, and Huayou to help build an EV battery ecosystem in Indonesia, investing close to about $5 billion. Billion with a big old B. These are the things we should be looking out for. The U.S. stock markets are wobbling in terms of gold and fixed assets. Yeah, they are wobbling as they're waiting more and more bank earnings to signal whether the banking industry is strong. If the banking industry shows signs of weakness, people are going to keep diving into gold, and that's why they are holding their gold. But JP Morgan did actually keep giving a strong announcement of earnings as of last week. Now, we did see, as we said, we did see JP Morgan earnings come in to signal. Now, Jamie Dimon ended an interview saying he's saying bank meltdown, what? That is pretty much what people were picking up on Jamie Dimon's tone of voice. Now, he has been talking about doomsday scenarios, but unfortunately, that's not backed by the fact that his banking results actually came out relatively strong. So there's a little bit of confusion. And just to share that and to just to transition into that very quickly. We did see some of the news, as I said, from JP Morgan's financial statement, just to show you that the banking sector may not be as weak as we have thought. So when you pick it up on the banking sector, what you're seeing is JP Morgan last week did actually give their financial scorings. Their revenue rose 25% to 39.34 billion. Profits jumped by 52% to their profits jumped by 52% to 12.26 billion. This is just for the first quarter, by the way. This is from January to March. The net interest income surged by 49% to 20 billion on higher rates. And they said net interest income is expected for JP Morgan to close at 81 billion, 7 billion higher than the year before, as JP Morgan will pay less to depositors as the Fed starts to cut rates. This is what they were saying. So this is actually signaling that America's biggest bank by assets is already still in good shape. So the views that there's a sector-wide banking sector collapse might be misguided. So we are seeing that as the country is still awaiting, they're holding things like gold up $2,000, but they're waiting to see more and more bank earnings. And today there's a lot. You're seeing a slew of bank earnings coming in this week. So to see if America's major banks are still in strong position or they're in weak position. In terms of oil, we have seen that oil turned lower as everyone is waiting for the U.S. Federal Reserve, Reserve's rate hiking decision. But we are waiting also for Chinese economic data to come out today. And German imports of oil rose by 8.5% in 2022, mainly due to Russia. Russia was their biggest point where they were getting it from. Now, GDP in terms of China is expected to grow by 4% from January to March. Versus the previous period. Now that's faster than September to December, October to December, but that is still slower when the economy only expanded 2.9%, but it's still slower than the 5% annual target that they are looking for. So China is still struggling to get into that 5% year-on-year GDP growth. And that's actually a bit of a weak point. And that might actually start to pull countries like Zambia down. But it does appear that Zambia is starting to break free of the China hold. We seem to be having some sort of general economic growth that's driven by our industrial sector as opposed to our mineral sector, because even under the contraction of mining, we are still getting very strong economic growth, mainly due to education, transportation, and ICT. ICT, education, and transportation have been key drivers of economic growth, and also manufacturing. Those have actually helped push the economy forward in the time where mining, construction, real estate, and agriculture have all faltered and have slipped. Even though we're getting good exports in agriculture, we still have some sort of weakness in our agricultural exports. The Bank of England also is saying that they're likely to hike rates one more time, but by a quarter of a point. In other words, 0.25% in May, according to a Reuters poll. And for those of you who are in the crypto craze, looking at your wealth insurance portfolio, those who are trying to hold wealth insurance, this SEC commissioner has criticized the new approach of trying to extend the definition of an exchange as an aggressive expansion of regulatory powers to solve problems that do not exist. So they are saying that they're trying to overregulate the crypto space. So watch out for what that might mean. And yesterday we did see news that the IMF during its meetings has launched something called the Universal Monetary Unit in alliance with the Digital Monetary Union. as a unicorn central bank digital currency aimed to bolster sovereignty while adhering to the IMF recent asset policy recommendations on cryptocurrency. So you are starting to see, by the way, the IMF, the central banks around the world are starting to embrace cryptocurrency a little bit more. The reason I say this is that there is going to be a guideline that does actually allow for banks, especially by the Bank of International Settlement, for central banks to hold about 2% of their 2% of their balance sheet in cryptocurrency starting 2025. So you probably will expect that you probably will find some of the legacy cryptocurrency, be it Bitcoin, be it Tether, those ones, there'll probably be quite a strong buying of it, because once central banks get onto the market for something, things like gold, we've seen them, that the value of these things start to pick up. So there does seem to be a 2025 rally on the horizon. You do see that a lot of the regulatory frameworks and a lot of the bodies are starting to prepare themselves to start engaging in a small, tiny fashion into cryptocurrency, which might add legitimacy to it. So Ethereum and Bitcoin are probably going to be the front runners of that. That's why holding them as a wealth insurance asset might not be harmful to one's portfolio. So the first thing I want to touch on today is in today's deep dive. And in our deep dive today, one of the first things I want to get into is actually a conversation regarding how to wait, because we are seeing that there is a lot happening around our economy. Now, my biggest concern about us as a group of people is that as we are waiting anxiously for our government to resolve some legacy issues, this is something I said yesterday to as many people as possible. What are you doing to prepare for when things go right? Okay. So if you're waiting for a deal on debt to be signed and therefore to start seeing things happen, this is what happens when a deal on debt is signed and we start to get what we call Goldilocks expansion. Because what could be holding the price of certain things up is the fragility of our currency. And the fragility of our currency is reflected in how long this debt negotiation has happened, because the fragility of our currency is therefore going to bring a lot of inflation in it. Because right now, the global food prices are coming down. Global energy prices are stable. Okay, so these two things are exactly what's going on right now. Those are the main things that we are seeing in the global environment. But we're not seeing it fully reflected in our inflation, which has held just below 10%, but it's not coming down to the 6 to 8% markers. So once you have debt deals starting to come about, these are the things that are probably going to start occurring. You're probably going to start seeing a flood of capital that comes into your bond markets. So offshore investors come in and they specifically start targeting old and legacy bonds, especially 10 and 15 years, that many banks are holding. So a lot of banks and a lot of institutions are holding huge stocks of legacy bonds. And what that'll do is that the banks will then have a liquidation position where they'll be able to make an immediate profit on trading their bonds. And they will take it because they're profit seekers. They're banks. This is what they do. Once they liquidate a lot of their bond positions, because a lot of these offshore holders would like to have these bonds, because if Zambia, this is if a debt deal comes. Okay, so if a debt deal comes, Zambia's debt becomes less risky. The offshore investors demand less. They start pushing down rates. And because we're going to have now more favorable credit, you'll find that the interest rates will start to come down. Obviously, the next level will be coming down from the 20s into the late teens and then probably into the mid-teens. Now, with this in mind, the offshore investor now starts playing the game of being able to hold those long-term bonds, and the banks are able to liquidate. Banks will therefore have a lot more cash on their hands, meaning they'll be looking to lend more. And with a government that's looking to borrow less and only restrict its bond auctioning to only 3%, and an offshore appetite that is now going to be looking to try and grab hold of Zambian bonds, this is in the event that you do also start to get lower interest rates in the rest of the world, and also you don't go deep into a recession. This is contingent on that, but the expectation is that they're able to start playing. And the reason I'm saying this is because bond markets around us are starting to rally. Okay, there are strong performances as emerging markets, bond markets, and there's strong performances in bond markets around the world. So if you are seeing strong performance in that, that is a signal that if we get our debt sorted out. So the question I ask as many people, what are you doing to prepare yourself for the changes that will come? Are you demanding that you start seeing a more prosperous situation, or are you actually preparing yourself for it? Because this is the mistake a lot of Zambians make. We expect things to be done, but we are not ready to receive them. So here are some of the things, like I said, with banks flushed with cash, they're going to have to start lending to the bigger businesses, which are your listed companies. Those listed companies are going to be able to access cash at cheaper rates. They're going to be able to refinance legacy loans that they have, therefore bringing down financing costs and increasing capex opportunities for expansion. So you're going to go through stock market companies who are going to be able to invest in expansionary activities due to access to capital. Now, already in the last year, we saw capex spending on the stock market increase from 1.9 billion to about 3.2 billion. So already saw a doubling in capital expenditures happening on stock market companies. So we're already likely to see that go even further if we see that banks are now able to slice in money at a cheaper rate for them. So expansion of stock market companies will probably lead to expansion of sales and expansion of activities, and they will grow, and they'll be able to also target some of their export markets that they're looking for. And that expansion will lead to a stock market rally. So the first question I will ask anybody if we're looking at asset markets is, how many people are prepping their savings right now to buy up the bonds that they have now so that they can stock up the bonds that are on the market and that are priced right now, so they can stock up on high interest bonds, so that they can those can kind of balance out their portfolio, and then start transitioning into the stock market to start buying fair price stocks with strong growth opportunities and decent business models and well-timed parts of the market where there's demand growth that's timed in. Stocks like, for example, Zambia Sugar, where they're going to start having to supply to Ndeni's mingling process. Stocks like Puma Energy, who are then transitioning into LPG gas. Stocks like CEC, who are trying to make sure that they sell electricity across the border to Congo to try and help with cobalt market, or try and help with energizing cobalt industry. Stocks that are fair priced, stocks that are high valued and have got strong growth opportunities and dividends. Stocks like ZCCM, for example. So I've given you a list of these companies. Now, obviously, sit down with advisors on which stocks to pick. Sit down with your broker, have a conversation. Does this fit my portfolio? But how many of you are actively taking steps to start venturing into the stock market, to start maximizing your bond portfolios and entering into the stock market, so that when the stock market rallies and the bond market then reduces on gains, you're not standing there with your hands out saying, oh, but how did we miss out? Because you were busy debating and complaining instead of acting. So there are people right now, Zambians, who are stockpiling on assets right now as we speak, while the rest of us are busy lingering and conversing about the kafwafwa that's happening around the world. So this is something you want to try and have a conversation about, or at least start getting into action about. In fact, forget the conversations. You got to start working on this stuff. So what are you doing while you are waiting? Are you waiting? Are you waiting passively, or are you waiting aggressively? And this is the conversation I'm really trying to get to people. When you do have a debt deal, okay, what then tends to happen is, because banks are flushed with cash and they start lending as much as they can, these bigger businesses start hiring a lot more. So you start to see a job market uptick, whether it's just wages and also hirings. These start to tick upwards. So when the job market goes upwards, what are you going to be doing? Are you going to be caught on the side where you haven't been bettering yourself? Have you been working on your skills? Have you been working on your credentials? Have you been networking? If you haven't been doing these three things, how do you expect to benefit from the job market booming? Okay. So what have you been doing to better your skills, your development of skills? Are you becoming higher skilled? What are you doing to develop yourself in terms of the networks that are around you? Are you online arguing in comment sections, or are you actually going on YouTube to maybe learn some of your skills? Are you taking online courses? What are you doing to improve your chances of benefiting from a job market uptick? Or are you deciding that you'll do that only when that comes, and good luck to you if that's your philosophy? The third thing is that if you're a business and you're saying, well, I want a stronger currency, and I want a stronger currency so that I can import machinery, and I want access to credit. Fantastic. Well, if you want those things, have you worked on the things that you require to actually have those things? If you want to import machinery with a cheaper currency, with a stronger currency, well, the question is, do you have the customers to then sell the produce for that machinery? If you want to start buying cameras and all sorts of things, do you have the audience? If you're a YouTuber, for example, and you're saying, I need cheaper cameras, well, have you worked on your scripts? Have you worked on your audience? Have you piloted your program? Or are you just going to buy yourself an expensive camera and then try and figure it out from there because the currency got cheap, because the dollar got cheap? So you have to start asking yourself this question: what are you doing in preparation for the things you are expecting? Because if you're going to hold the government to something, if they deliver, in fact, when, because this is getting closer, when they deliver, are you going to be one of those people who sits on the sideline waiting for things to get better? Then when they do get better, you are unprepared for things to get better. Then you're going to try and better yourself. You're going to miss out on a lot of opportunities. And then you're going to complain that the rich are getting richer and the economy doesn't work. What I've noticed about the Zambian economy is it works for the most prepared. The people who use the down times to prepare for the good times maximize on the good times and minimize the hurt on the down times. Then when the good times come, they're preparing for the bad times. This is the mentality that they have. They're always in a season of preparation. Somewhere in their views, they're always preparing for something. So when things are going well, sales are going well, they're stockpiling cash for the bad times. When the bad times are hitting, they're making investments so that when the good times come, they can accelerate their growth. While the rest of you decide to try and save when things are bad, and then you spend like crazy when things are good. What are you doing with yourself? Okay, this is the time to be piling up assets. During this period, you should have been piling up assets. So the questions you have to start asking yourself is, if you're a smaller business who's going to be expecting that when banks are issuing loans, have you worked on the cash flows of your business? Do you have accounting systems? Do you have customer relation systems? Have you been working on these things during this time, or are you engaged in the conversation of this honorable said this and this honorable said that and all that, or are you focusing on improving yourself? So these are the questions that I wanted to get, that as we await, how are we waiting? Are we waiting passively, or are we waiting aggressively? Are we waiting? Are we waiting? Are we waiting just sitting idle, or are we waiting active? Because there is active waiting that you can engage in. And these are just examples that I've talked about. Are you buying up the assets for the next economic season right now while they're out of season? Or are you waiting to see, oh, the stock market's doing well? So as many people have to start looking at themselves and start doing that. So these are some examples of things I can give you right now so that you can start looking at how to better yourself. So that is a question of how are we waiting? Now, some of the other news that came out yesterday in terms of our deep dive, big story that we did see yesterday was NAPSA. President Hichilema did announce yesterday that he had signed into law NAPSA, the act on NAPSA. And I'm going to take this through a basic reading to help us all understand it, because I think this is the part that we do not do. But Section 4 of this says the authority shall determine, obviously, shall determine the national average. Sorry, that was the wrong one. I'm looking at Section 1918. The Principal Act, so this is about the minimum amount of retirement pension, the minimum amount of a person's retirement that can access a pre-retirement lump sum benefit shall be 80% of the minimum monthly pension. Okay, so in other words, this is what this is what they will be looking at. So if you want to try and access that, once off pre-retirement, the once off pre-retirement benefit, this is what they're talking about. Please pay attention to this. Despite Section 21, a member is entitled to a pre-retirement lump sum benefit where that member consents in writing to access a pre-retirement benefit to the pension. Pre-retirement benefit is below pensionable age and has a mandatory of 60 monthly contributions. In other words, have you contributed 5 years? Okay, 5 consecutive years. Have you worked for 5 years contributing to NAPSA and attained the age of 45 or attained the age of 45? That's an or statement. So you're either 45 or you've attained that. The pre-retirement benefit payable under Section 1 shall be 20% of the indexed monthly contribution and accrued interest. Now, what that simply means is that there's something we use for your NAPSA calculations called wage indexation. So how do we get to the value of your NAPSA contributions? It's very simple. Every year, the interest added to your NAPSA is equal to the percentage growth of the national average wage. Okay, so every year, if you look at what you're contributing to NAPSA, the interest that you add to the balance of your contributions and your employer contributions is equal to what is the percentage change in the average wages that NAPSA has captured that year. So if the average wage has moved up 6%, then there's a 6% interest applied to your money. If the average wage has gone up 20%, then there's a 20% interest added to your money. So that's how you calculate what is the value of your NAPSA. It's just simply a question of what interest is to be applied to it. That's all that it is. Okay, and at the end of every year, the cumulative amount that you're sitting in there has interest applied every single year. So in January, there's basically an interest announcement that happens. Okay, that's all you have to do. So track your NAPSA by just simply adding an interest of so whatever the percentage change in income is. And it's announced every year, by the way. NAPSA actually announced what the national average wage is compared to the previous year every single year in January. They give you that information every single year. And they publish this regularly. We capture it as well. So for most of our clients, we actually have a system where we can actually grab this information to see this. So that is something that you should bear into consideration. Now, what does it mean? Well, what it means is, one, you can access 20% of your money. And the rest of it talks about now your benefits payable afterwards. I think the number everyone's looking out for is, what can I access? Well, have you been contributing for 5 years or 60 contributions? Okay. Have you contributed 60 times to your NAPSA? Are you age 45? And therefore, it's 20% of whatever it is that's available that you can now access. Now, if you look at it very carefully, remember this: your retirement is what will be there when you are unable and unmarketable in the job market. Just remember that. And when you retire, you are going to need to eat food. You are going to need to move around. You are going to need to still have clothes. You are going to need to not die in misery. Okay? Because a lot of people die in destitution and misery. So the decisions you make now with this, the good thing is they're only allowing you 20%. So at least we've preserved the bulk of it. But should you need it now, if a person who goes through invalidity, in other words, you're not able to work anymore, you can access 80% actually of that if you've gone through invalidity. But if you haven't, then you can only access 20% of it, meaning you are active and able to seek out work. So maybe you need it. Maybe you've got a business and you need to buy up some equipment for something. Maybe you were working for many years and now you've got a studio you want to try and set up and you want to try and buy a camera. Well, now you can access a bit of your NAPSA for that capital. Instead of trying to get a bank loan, instead of going through your savings, you can now access that. So that's a savings that's accessible. So if you're an entrepreneur, this might be useful to help you with the small odds and ends, especially if you're a starting entrepreneur and these things you'd like to invest in. So that I understand. But just always remember that always look at your life, and this is something that we put out here as what we call your total liquid wealth buckets. So whenever you're looking at your buckets of wealth, so just remember that you're stored in these 5 buckets with one draining point, and then you get your net liquid wealth. So there's your paper wealth, which is your stocks, your bonds, your cash. It's your marketable securities plus cash. Then there's your NAPSA account, which you can use every day. You can access getting your wage indexation numbers up to date. There's your employer pension. And your employer pension is if you have an employer who's actually storing up a pension, or they save, or you got a gratuity that's due to you at the end of a specific period. So look out for that number. That's usually sitting there. Then there's rental property. In terms of rental property, I always say take the total amount of rent that you earn from something and multiply it by 156. If it's not a cash flow generating, this is not added in your liquid wealth. And then there's a emergency cash, which I always say should be somewhere around 25 to 50,000 kwacha every single point, so that you can always handle an emergency. But it should be able to cover 3 to 6 months of your expenses, your basic expenses, people, not your luxury expenses, your basic expenses. That is what your emergency fund should be able to handle. And then your non-mortgage debt, how much do you owe? So when you subtract that from those 5 wealth buckets, then you can see what your net liquid wealth position actually is. So NAPSA does play into this. And the reason NAPSA also plays in, people also pay attention to the fact that NAPSA is also partially it's a life insurance that can be there. If anything happens to you, your loved ones who you leave behind can actually claim on your NAPSA. Okay, so there's something called a survivor benefit, and a survivor benefit is one where you have to be very careful though. If you have no one surviving you, if you're single, for example, then your NAPSA is if you're single, for example, let me say, then your NAPSA is about 30. Your 50 on your people who are left behind, your administrators will be able to claim about 50% of that. If you've got a wife or a husband, then they can claim about 66% of that. If you have a spouse and children, and a child, each child then adds a percentage, a share, a point. So if you have a bigger family, the rest is kept by NAPSA. So that's how NAPSA makes money. They keep some of your retirement benefit. But this is just something you want to take care of. But just always remember, people, to keep filling up your wealth buckets. This is how a person who's working does fill up their wealth buckets. Generally, you put into your paper assets, you put into your NAPSA, you put into your employer pension, you put into your emergency fund, and then on the side, maybe you're building your portfolio of real estate. So this is just how to keep in mind. Now, you can draw from it, but just try to avoid too much of it. Obviously, they've only put an amount of about 20%. So really, you can't do much. And 20% of it. So you have to work out what is the total indexed value. So go back to the first time you contributed from NAPSA, start running the numbers, and the interest rate is just simply whatever the change in wages every December to January. What is that change in wages, in national wages, that was announced at the beginning of every year? They announce it every January. You can actually capture that. We actually have that data stored ourselves. Other big news that we're going to quickly deep dive into the market. One is that East Africa could be the continent's next giant. Now, I've been talking about us trying to wonder, should we be stuck with SADC, or should we be considering East Africa? Now, East Africa has actually been is actually currently expected to hit about 346 billion. East Africa community, should I say, is currently expected to hit about 346 billion kwacha, and the bloc is currently working on adding Somalia and Ethiopia into their books, putting them at probably 151 billion. Ethiopia is one of the continent's biggest economies. They also now will have one of the biggest coastal lines, except for West Africa, obviously. They'll have a huge coastal line, because Somalia, which is the country it's African country with the biggest coastal line of 3,000 kilometers, will add to East Africa's combined coastal line, giving them 5,000 kilometers of coastal line. So Somalia is actually of use in as much as it's a smaller economy. Somalia is of use because a coastal line will actually help them with trade if they can just control what's happening with the pirates. And the IMF has actually predicted that Tanzania will now become Africa's sixth largest economy, especially coming up soon, right behind the main five. Now, here's some in our charts of the day. I'm going to start actually talking about this in terms of why I think it's important to look at the alignment to East Africa. And here's some of the points that I wanted to put into your mind. One is that East Africa is actually going to be the fastest growing part of Africa. You can see it here in terms of economic growth. East Africa has actually been and is still going to be one of the economic growth hotspots. If you're looking very carefully, look at the growth here. The first bar, the blue bar, is what is the growth we saw in 2022. The light green one is the growth we're expecting to see in 2023, and the average growth we're expecting to see from 2024 to 2028 on average. So the expectations we're looking at here is that if we're looking at 2024 to 2028, North Africa is expected to grow only 4.1%. West Africa is expected to grow 4%. Central Africa is expected to grow 3.1%. East Africa is expected to knock in 6.3%. This is higher than emerging markets areas like China and India. Actually, this is at their levels. 6.3% is what we're expecting from East Africa economic growth annually, real GDP growth year to year. Okay. From 2024 to 2028, with countries like Uganda, Tanzania expected to all knock up close to 7%. Remember, it's got 5 of the 7 fastest growing economies that are expected over the next 5 years. Southern Africa, unfortunately, has 4 out of the 7 slowest growing economies. And that, unfortunately, is anchored by South Africa. South Africa's economic growth is pulling down Southern Africa to only expect 2.7% economic growth for the next 5 years. So you can see how sad a comparison. Zambia is stuck between Southern Africa, who we have historic allegiance to, of 2.7% economic growth, and potentially trying to lean harder towards East Africa. And the East Africa community community effect is that by 2027, they will probably have a single currency. So let's take a look at what impact East African growth is going to have on the African trajectory. So if you look at it this way, in terms of cumulative percentage of expansion, the East African economy is expected to expand by 35% in real terms, by the way, from 2024 to 2028, while SADC is only Southern Africa, is expected to expand only 14% during that same period. Central Africa is expected to only grow by 16%. So you can see that East Africa is going to experience the biggest expansion, with North Africa 22.4% and West Africa 21.7%. This is all IMF data from their April 23 forecasts. And we're also expecting that in terms of the GDP sizes, East Africa is going to experience one of the biggest expansions. North Africa is expected to become $1 trillion economy, while West Africa will be teetering on the edge by 2028, while East Africa is expected to have moved from $509 billion to 704. Now, they wouldn't have surpassed SADC, but look how close the margin now will be. SADC currently is $160 billion higher than East Africa. But by the end of 2028, we're looking at that gap narrowing to $70 billion. That's how fast and rapidly East Africa is. And probably over the next decade, we'll find that East Africa would have trounced SADC because of how slow South Africa is struggling to get out of its load shedding problems. In addition to all of this, we are also seeing that if we're looking at contributions to African growth, here's the interesting part. Now, North Africa, because it's the biggest, will contribute the largest to African growth. The African economy is expected to grow $600 billion in real terms, but 29% of that will come from North Africa. 27% of that will come from East Africa, which is only 16% of African GDP contribution. So already one of the biggest things you can note here is that East Africa is actually going to be one of the key drivers of GDP growth in Africa in general. So that's some of the data that we are seeing quite quickly there. Now, getting into our topic of discussion, our quick topic of discussion, one of the main points, and I know we've lost Vernon out for today, one of the main points that we do want to look at today is building a portfolio that is gritty and determined. Because remember, our main part of the growth mindset, remember our 4 pillars of the growth mindset has been learning, change, embracing change, learning from failure, and now this time it's continuing, never giving up. We talked about the importance of strategizing. So I'm going to talk about the 3 pillars of a person who is determined and how to apply that financially. And the first pillar that we're going to look at is grit and determination. Now, we had the grit formula. We had Angela Duckworth's grit formula, which talked about how the fact that effort is extremely important. So if you want to reach a financial goal of getting yourself to millions, effort is extremely important. So there are 4 components a person needs to put into their financial structure. One is they need to discover themselves in terms of their money. Okay, so you need to actually become a passionate investor. You need to actually become passionate about your finances in order to be able to have the determination to keep making good financial decisions. And it needs to be infused with things that you are interested in and passionate about. So whenever you're structuring your financial freedom, I always give people what I call the wealth pyramid. And I've showed it multiple times. At the top of the wealth pyramid is your meaning, the meaning of your life. And there are 3 philosophies of meaning. But remember, your meaning is your legend, your legacy, and your lineage. Okay? And your legend is broken down, can be looked at from 2 perspectives. There's Rick Warren's 5 purposes of life, and there's Viktor Frankl's 3 wells of meaning. So if you look at yourself in that perspective, then you're looking at things that you're passionate about. And your 3 wells of meaning, remember, is a task that is unfinished, people who you seek to elevate, and the ability to go through something bravely. Dave Ramsey does something called the debt-free screen, where people go through paying down hundreds of thousands of dollars of debt. Regular people, teachers, shop workers, nurses, people who go down huge debt payments. I think Jane Mazimba even shared her story. If you go through her book, if you listen to her TED talk, she talks about how she's gone through the process of paying down debt drastically and fighting that. And people who've had to go through these things. So that's what we call suffering bravely, because it becomes an inspirational tale for other people. Now, not to be some masochist who just goes out looking after suffering, but to actually go out there and say, when I have to face something, it has to be a story that I can tell another so that they know that they can get through that. So things like paying down your debt, things like saving when you need to, things like deciding to live like no one else so that you can live like no one else in the future, deciding to curb back on things that your friends are doing now so that later on. I think President Chilema tells that story of how when he was younger and his friends were all going out and having fun, he took a job and he took that first money and bought a piece of land in Kalingalinga. And because he couldn't afford builders, he went and built it himself. He actually tells that story how he went and built that himself. After school, he would do that, and he got it to a certain point, got someone to buy up the finished property, started building another one himself, got it to the end where he managed to actually finish it. So he got it to an almost semi-finished state, asked a company to finish it for him. Sorry, he asked a company to finish it for him. He went to school in the UK, got his first property where he was gaining rent. But it took him sacrificing. It took him getting mocked by his friends who were laughing at him, even though those friends would have nothing. But the reality is he became who he is because he was willing to endure the social mockery that he was facing when he was a kid, that very few of us would. We would join the friends who are laughing at us instead of doing the things that would give what would build our future. So a lot of it comes from, one, there's an interest in what you are doing, and you kind of deepen your interest in yourself. Do you take an interest in your finances? So it takes about a little bit about discovering financial purpose, about discovering finances, growing yourself in there, and then deepening your understanding and knowledge. And one of the things you can continuously do is constantly read, read, read. As you are reading, as you are investing alongside reading, you're going to be deepening yourself in money constantly. Okay. And you also have to keep developing yourself financially. Are you developing your skill set so that you can earn better? Look at your money skills. What are you developing? So constantly work on developing yourself. Your passion gets deeper the more you develop yourself. So the better skilled you become at your ability to generate money, the better skilled you become at managing your money. These things will start deepening your passion. So always look at developing yourself. The second thing you also want to do is deliberately practice. Okay. You must keep improving yourself. Practice is important, and deliberate practice is different from just practicing. You can't say, well, I've been budgeting for years. How come I'm not getting better with money? No. Are you budgeting in a way where you're looking at your weaknesses and constantly attacking how you can improve them? Where are my weaknesses? Where are my financial weaknesses? Where are my leakage points? And every single month, I'm going to keep looking at how I can keep bettering them. Are you tracking your progress in these areas? Are you looking at, okay, so I used to spend a lot in this area. I used to spend on entertainment this much. I've managed to bring it down so that it's within my budget reach, and I'm shaving it down. What are the active strategies you're working on doing? Now, if you're looking at trying to build it, if you're looking at Angela Duckworth's grit determination grit formula, if you're looking at practicing deliberately, what is your stretch goal? Okay, so look at your revenue. Okay, what's your stretch goal for your revenue? What is the level of focus you're applying to growing your revenue? What is the immediate feedback you're looking at? As in, what is the method you're looking to track your performance? And are you repeating, reflecting every single month and saying, okay, so I made an extra this much. I grew my revenue by this much. How is this possible? The same way businesses track their revenue, you should be tracking your abilities. Okay, I'm investing in my knowledge so that I can improve my revenue. Am I making this incremental progress? So maybe I need to increase my knowledge capital so that I can increase my financial capital. I need to increase my social capital so that I increase my financial capital. Are you working on these things and tracking the progress of it? Are you looking at your spending management? Are you then attacking it as well? And are you tracking your savings as well in the same way? What's your stretch goals with your savings every single month? Well, how much are my savings supposed to be getting up to? How much are my investments supposed to be getting up to? Tracking this thing regularly at that level of intense focus, that is called deliberate practice. The key also is then purpose. Purpose is a very important principle when it comes to this, is that are you kind of aiming yourself at, are you aiming all of this at a higher cause? Okay, so when you get rich, the question I want to ask you is, okay, so when you've gotten rich, what is it for? Because getting rich can't be for getting rich sake. Because what's going to happen is that then you are in the pursuit of pleasure and you are in the pursuit of power. And people who are in the pursuit of power and pleasure always find themselves miserable. It's the easiest way to become miserable. So that you have to be content with what is there and in pursuit of a higher purpose. When you're looking at that, then you will withstand all the requirements and everything that is asked of you. So what is the higher purpose? What is the legend? In other words, the five purposes of life and the three wells of meaning. What is the legacy? What do you plan on leaving behind that people will benefit from or people will build on? And who do you plan to leave behind? When you can answer those questions and all your financial decisions are aimed at that, deciding to buy something and not to buy something becomes an easier conversation for you. Okay? Because there is a higher reason. And then obviously, adopting a growth mindset means constantly learning when it comes to this stuff, constantly improving yourself. How many financial books are you reading? Are you reading at least a financial book every month so that you can improve yourself? Okay, there are hundreds of these things that are written, pearls of wisdom by people who have actually built wealth in this world. Are you reading those things? Are you applying them? Okay. What courses are you taking? What communities are you a part of? What ways are you making your mind and your spirit grow in this area? And then obviously, to add to this, I would look at your principles of financial intervention, your principles of fragility. Have you built your financial system so that it's anti-fragile? In other words, have you built it in a way that it can grow? Are you able to capitalize in the down times and pick up in the strong times? Are you able to survive time? So is your strategy built where you're going to be doing it over a longer period of time? Are you understanding the real underlying factors when you're collecting data and information to make decisions? Because I'm telling you, progress requires strong emotional energy, but it requires data-driven decisions. In terms of that, are you trying to make sure that you're listening to signal and not noise? Are you responding to market trends or are you looking at market price movements? People who look at market price movements make a lot of losses. People who look at trends and underlying principles tend to be able to build wealth over a period of time. Okay. Are you using failures to be able to eliminate things? So, what are you doing when you are implementing a financial strategy personally to be able to build on the principles of anti fragility? So, those are the things that you have to look at to build rugged determination. Now, part of what I've seen in a lot of people, especially when it comes to this question, is being able to withstand periods where not much is happening. A lot of people give up on their financial journey because it's long and there are periods where nothing is happening, where it seems like nothing is happening. You are pounding money into the bond market, but all that's happening is your savings are not really moving by that much. They constantly just, there's no interest that's being accumulated. And I've seen so many people who, after 12 months of putting money into an account, will say, but there's not much here because it takes time. Okay. That's like farming. That's like planting a seed and expecting a full harvest tomorrow. It's not going to happen. You're going to have to sit, wait, and water. Most of your crops spend most of their time under the ground than over. Okay, that is the reality of crops. That is the reality of anything. It spends more of its time underground, invisible, growing, not visible to the eye. And the same thing is true with finances. A lot of the growth happens while you are with things you cannot see. It is compounding together until it actually starts to come together. And that's when you start to see that most people start going through that explosive growth season because they were able to withstand. Most people give up due to silence. They give up due to the silence of their portfolio. So the question I want to ask you is this: what are you doing in the quiet periods? That's why I asked that question of waiting for the waiting for the debt deal. If you are saving and investing for a goal and you're managing money for a goal, what are you doing in the quiet period? So here's what you can be doing. You need to look at what parts can you work on. Here's the reality. If you are waiting for something, time will move slow. If you are working on something, time will move fast. So here's my advice to many people: Find ways to continuously work on yourself, because if your target is to save and invest or build yourself to the point where you can have millions in wealth, the thing is, millions in wealth have got millions in wealth responsibilities. So the question is, what are you doing to improve your character and your culture so that by the time wealth finds you on that side, when you've been saving and investing according to your target, when wealth finds you through those silent periods, what books are you reading? What conferences are you attending? What courses are you taking? What knowledge are you consuming? What are you doing on a daily, weekly, and monthly basis to continue your journey? Are you budgeting carefully? Are you getting better at budgeting? What are you bettering every single day? If you can put your focus on what you're bettering, your determination levels can actually increase because you are focusing on bettering yourself, so that by the time the blessing arrives, the actual point where you're actually now able to actualize your wealth and finance goals, by the time that arrives, you have the knowledge of how to handle money, you have already structured your will, you've already started working on your how to educate the next generation, you've become smart with money, so that by the time that huge amount of money is available to you in your hands, you're not going to make silly decisions and eat your money. Okay, you are going to make wise decisions and expand it and structure it correctly. So what are you doing to better yourself while you are awaiting the thing that you're waiting to come to mind? Now, my final thought for today actually comes from a video that we actually picked up from the Urban Evangelist of an interview with the late Munasin, who passed away recently. May God rest his soul, and our condolences to his family. And when he talked about failure, it's a 2019 interview, and I know people have seen it circulating, but we are going to share it as well. And I think it's really interesting.
It's pretty much about numbers, and number one at that.
Yeah.
Is it painful for you to lose?
One of the big things that we normally teach, because I love also talking to a lot of these young drivers, and I learned it in a very quick time, because I also raced against Satwant, who was a brilliant driver, is that you've first got to learn how to lose before you can learn how to win.
That's a good one.
Yeah, and it's just so important.
Yeah.
And so in any sport, you must be a good loser before you can be a good winner. And so you got to know that you will not always be number one, and you got to be ready to congratulate the person who's won. You need to, then you look back up and see what went wrong and how can you better yourself.
Yeah.
It's a lot harder to stay number one than it is to be number one.
Very true.
Yeah, so
Very true.
So those are a few things that we straight away you need to learn as a sportsman.
Okay.
That
okay.
you must
and
be ready
who
for
passed
defeat.
that on to you?
Well, it's really been there in our family, because it's just the kind of nature of sport that you need to be a good
That
sportsman.
could be your family secret then.
Absolutely.
Therein could lie a secret to the success.
And with that, the thought there is you have to be able to take the knocks. The second reason why many people give up is they get knocked down. So the two reasons is what they're waiting for is not coming. And the second reason is they get knocked down and they can't get up. So learn from the things that you maybe get wrong. You maybe got swindled this time. Maybe you made a loss. You made a bad investment. Learn from it. And then at the same time, also work on yourself constantly. If you can do these two things, the two things that make you quit, the inability to wait and taking a beat, taking a knock, those are the two things that'll make you quit on your journey. If you can actively work on constantly improving yourself and learning from and using failure as always a learning opportunity, or coming in second, whatever, as a learning opportunity, then you can make it till the end. So with that, I thank everyone who has joined us. I know we didn't have Vernon in today. And to everyone, have a wonderful day. God bless. See you tomorrow.